Breaking news. On July 4th, 2025, President Trump signed into law the One Big Beautiful Bill. Whether you agree or disagree with the policy changes, there are some very significant tax implications coming. Hi, I'm Reese, the tax pro near you, and I want to give a top-line overview of the most immediate tax changes going into effect for the current 2025 tax year. With each provision that's introduced, it's important to note that there are both income phase-downs and phase-outs that apply. So get ready, they're coming quickly. Let's start with the standard deductions. These figures are slightly up from where we thought they were going to be. For those filing jointly, the deduction is $31,500. For those filing single, it's $15,750, and for those filing head of household, $23,625. Additionally, for each taxpayer over 65, they can get an extra $6,000 on top of the standard deduction. For those with children, you'll get an extra $200 per child, as the child tax credit has increased from $2,000 to $2,200. The residential solar credit is still good for 2025, but will be eliminated December 31st, 2025, which is much earlier than anticipated. To qualify for the credit, your solar needs to be installed and operational by the end of the year. If you're planning on buying an electric vehicle and getting the credit for it, this is the last year you'll be able to, but only if you purchase a qualified vehicle by September 30th. If you're planning on purchasing a new car, you can now get a deduction for interest on the loan, with maximum annual deduction of $10,000. Only loans incurred starting in 2025 qualify, and only for those vehicles whose final production is in the U.S. Bonus depreciation, which was set to only be 40% in 2025, has been increased back to 100%. This applies to qualifying business assets purchased at any point during the year, not just those that were purchased after the bill was passed. The deduction for state and local income taxes has drastically increased to $40,000. This is relevant for those who itemize, because this is a potential extra $30,000 deduction for real estate taxes paid or state or local income taxes withheld. This is big because you don't need to do anything different. You just get to deduct more of what you're already paying or having withheld. Lastly, we've now got deductions for tips and overtime. There's now no income tax on some tips and some overtime, each with a maximum deduction of up to $25,000. Tips and overtime are still subject to employment taxes like Social Security and Medicare. Now, there's a lot more information from this bill, and we've only covered some of the most immediate changes. I'll spend more time in the upcoming weeks diving into the details. Since the bill dropped in July, there's still ample time to plan out how these changes will affect you. So talk to a tax pro who can help you be proactive with your tax strategy so you're not just being reactive to these changes.